Alright, this is an article that Warren Buffett wrote in 1999 on Fortune magazine, and I want to go towards the bottom. I did talk about this before, and he's talking about cycles in the stock market. So think about this article towards the end of the video. But look at this. This talk of 17-year periods makes me think incredulously. I admit of 17-year locus, what could a current brood of these critters scheduled to take flight in 2016 expect to encounter? I see them entering a world in which the public is less euphoric about the stocks than it is now. Naturally, investors will be feeling disappointment, but only because they started out expecting too much. And now I wanted to go through some graphs that I made. Alright, I wanted to look in this video, putting that Warren Buffett article aside for now, of secular bear markets. I have talked about it before, but here are my own graphs, and I'm going to make some statements in the video that some people obviously will not agree with, but we could talk about that later. Alright, this is the Dow in 1929 at its peak, like 310, 320-ish. Don't remember the exact levels. And if you go all the way to 1942, right, when this secular bear market ended, if you want to do the math, let's see, like 320 minus like 105, around there, or it was like 107 divided by 320. So roughly a 70% decline in the stock market, which is incredible. Close to that amount, like 60 some percent to 70% decline in the stock market. So this was right before World War II, and right before World War II occurred, you had the stock market rally, and then you had a secular bull market from 1942 to 1965. Alright, now look at this secular bear market from 1965 all the way to like the 1980s, early 1980s, before Reagan came in. Look at this. Dow like 910 in 65. And where was it like in the early 1980s? Dow like 1920-ish, right? So the Dow went nowhere for 16 years. Just like I showed you, the Dow actually went down from 1929 to 1942. That was a secular bear market, but look how it went absolutely nowhere. And what happened in 1982, right? 1982, 1983, you had those tax cuts, right, from Reagan. I think it was 82. And from 82 to 2000, the Dow just went on a tear from like Dow 1000 to Dow 11,700, which was ridiculous. Right around the time where Warren Buffett was writing about the year of cycles, 17-year cycles. And if you want to look at right now, let's go to the graph. Right, Warren Buffett was talking about these cycles, right? And sometime in January of 2000, the Dow hit an all-time high of 11,700-ish, right? And we are 14 years after that initial high of the Dow, right? We've hit Dow highs recently as well, like Dow 16,500-ish or a little above that. And if Warren Buffett is correct, and I think that he will be, that from the year 2000 to 2016, the stock market will have gone absolutely nowhere. And it's in my prediction that it's going to hit somewhere around this level, 11,700-ish, right? That's what I see the Dow hitting in 2016 to early 2017. And that's when I'm going to aggressively buy the stock market, because that's how the Dow works, and it works in cycles where you see secular bear markets followed by secular bull markets for 17 some years, secular bear markets for 17 some years, and then secular bull market. And the cycle returns. And in between, you're going to have some bull markets and some bear markets, right? So that's something to note. Alright, I wanted to end this video by showing you an updated chart of margin debt, NYSE margin debt versus the S&P. As you can see that these graphs are somewhat correlated, and if you want to look at the two peaks, 2000, 2007, and then if you want to look at 87, there's peaks in margin debt and the S&P. And if you look at as of February of this year, looks like we are on the verge of another peak. That being said, why do I say that 2016, 2017 is going to be the year where I see the Dow hitting 11,700? Once again, these are my thoughts, right? And this is my explanation of why I believe it's going to hit Dow 11,700. I showed you what Warren Buffett was talking about, but if you look at these charts here, right, you see the peaks in margin debt around election time, 2000, 2007, and 2008-ish, 2016, 2017, around there, or 2015, 2016. And what I think is going to happen is 2016, 2017, when like the Dow hits around 11,700, and it could be there for a little bit, the market may go sideways. You're going to see individuals panic. You're going to see probably individuals like Harry Dent on CNBC. They're going to bring these guys on, saying that, hey, Dow is going to 3,000, 4,000. Once I start to see the media cover those guys in depth, that's when I'm going to start to load the boat when it comes to buying stocks. I'm just going to buy stocks like crazy, because looking at the charts that I showed you beforehand, we tend to have markets go in cycles. And it just seems that the next bull market, right, even though the Federal Reserve is going to no doubt play a huge part in manipulating the stock market higher, right, I want to ride that for the, I don't know, 15, 17 years, right? Sure, they're going to be pullbacks, but that's what I'm looking at right now. I mean, I was talking about deflationary head fake and all that stuff, so it all ties into what I'm looking at on this margin debt chart and the secular bear market charts. Now, we shall see whether or not my thought process comes true, but hopefully I could be right on this and my calls are right on this. But anyways, what do you guys think here? Leave your thoughts below. Talk to you later. Bye.